Options trading live trade alerts. You can join our 7-day trial at beststockstrategy.com/memberships. And here are all our trades for August 2021. So here we sold a put on Facebook and we sold two puts on PayPal, two new opening trades. Both are high B grades, maybe a low B plus. Then I give the spread option. New opening trade on MasterCard, B plus grade, spread option. S&P down 8. Then I give my closing thoughts. Portfolio hit a new year-to-date high. New opening trade on MasterCard. New opening trade on Amazon. Picked up $280. VIX spiked up over 20. Closed out BlackRock. Kept around 50% of the original premium. Two new opening trades in McDonald's and also MasterCard. B plus grade. McDonald's is a B grade. New opening trade for Amazon, low B plus. I provided my thoughts here. S&P up 36. Big reversal day. Market is down. Volatility is up around 3%. New opening trade for Amazon. Picked up close to $400. Our portfolio hit a new year-to-date high, August 5th. New opening trade for Amazon, B plus grade. Picked up close to $400. Fiverr, A minus grade. Picked up $140 per contract. Lockheed Martin, B plus grade. Closing trade for NVIDIA. Close for a large profit. New opening trade for Alibaba, B plus grade. So this was, I wouldn't necessarily say it was a stupid trade, but this wasn't the best trade. And I think it's important that we start talking about the amount of stress that people can endure when they're trading options. Because I know that when I trade, I'm extremely conservative. Maybe 3 to 4% of my trades end up getting challenged. And we actually haven't had a losing trade in about a year and a half. And the reason why I say this is this Alibaba trade ended up getting challenged, where Alibaba, it traded below 160, and I think it actually at one point, perhaps intraday, traded below 155. I think I remember it trading at about 154, potentially even 153. But the reason I say this is that when this trade ended up getting challenged, a lot of people, I mean, actually, I wouldn't say a lot of people, but maybe about like 10% of my students started getting like really nervous and really anxious. And I think that you have to ask yourself, if you're the type of person who gets agitated or anxious very easily, where even on 3% of the trades that end up getting challenged, you start becoming very anxious and very nervous, then it's quite possible that trading options is not for you. So, yeah, like this trade was pretty stupid, meaning that Alibaba is like a $450 billion company. Just its 52-week high, I think, was around 317 or so. And in this trade, we traded naked 155. We could easily roll it down below 140 if we wanted to. But even so, the trade did end up getting challenged. And if that's really going to stress you out when trading, then you really should ask yourself whether you should trade at all, and whether you should start doing, or rather focus your time on other ventures that can make you money as well. So, or, alternatively, if you do want to continue trading, and right now you might find that you have a propensity to being anxious or stressed out if a trade gets challenged, then maybe you just need more experience and more confidence in handling trades that end up getting challenged. But it's either one of those things. So either if you feel that your reaction to a challenged position is a little bit irrational, then it's really only if you feel that your reaction is potentially slightly irrational. If you do feel that, then you have two choices. You can either inoculate yourself against that anxiety by exposure response therapy, which means that you just over time, the more trades that get challenged, the more comfortable you'll get as you gain more confidence. Or secondarily, you could just simply spend your time doing other things and not trade. So yeah, like that's pretty much my thoughts regarding challenge positions. So yeah, this wasn't the best trade. Fiverr, new opening trade. So here with Fiverr, I sold something that had a relatively far expiration, primarily because I felt that it was significantly oversold and the strike price was very far out of the money. So I wanted to take advantage of the high implied volatility at that moment. And that Fiverr trade was actually good. It was a good trade. Zillow, 90 strike. This also ended up getting challenged. I think at this time, Zillow was trading at about 101, 102. And then I sold the 90. And I remember intraday, Zillow actually traded down to like 89.40 or 89.60. So this trade too was also in the money. And then the spread was also in the money. Now Zillow currently, I think, is trading about 97. But yeah, same thing like I said with Alibaba, where um, you have to just gain confidence that you're going to be able to handle these positions, irrespective of whether they get challenged or not. I think that I was slightly too aggressive because I have so much available buying power and I wanted to make sure that I made the trades. Yeah, I mean, that's what happens when you have a lot of available buying power and you haven't really made trades in a while. You tend to make trades that you probably shouldn't. And even if we make money with those Alibaba and Zillow trades, they probably weren't good trades, primarily because it led a bunch of people to getting stressed out, and no one wants to feel unnecessary stress. So Alibaba, B plus grade. MasterCard, LMT, Amazon, PayPal, UNH, Fiverr, Robinhood, Baba, Uber, and Zio underlyings to watch. We hit a new year-to-date high. Z5 and Baba up. Sold calls on Goldman Sachs to get some negative delta in there. Picked up $282 or $1.41 per share. Sold puts on Amazon, picked up $930. Sold puts, new opening trade on PayPal. It's interesting. So I sold a put on PayPal and picked up $44. And then I sold a put on Amazon and picked up $930. I really don't understand the rhyme and reason behind that. It almost kind of makes sense, like, to not even make the PayPal trade, or rather, if I was going to, I should have potentially sold that significantly larger. But yeah, it is what it is. August 11th. I think that's actually my parents' anniversary, August 11th. Okay, Amazon, 2 new opening trades. So sold an additional call in Goldman, and then sold a put in Amazon, both B plus grades. Bought back Facebook for about 6, looks like around 60% profit, slightly more. All right, 2 closing trades, the bottom 2, and 1 new opening trade, the top trade, where we picked up around $560 for the opening trade on Amazon, B plus grade. So for the closing trades, we collected about $850 total and closed it out by paying slightly less than $200, so around a $650 profit. The divergence in volatility gives me the impression that the market will be choppy in the near future. August 12th. 2 new opening trades, B plus grades. Closing trade for Facebook. August 13th. New opening trade for Alibaba. I remember this day because Airbnb fell like $7 in the morning, and then it rallied later in the trading day. Closing trade for Nvidia. August 16th. S&P down around 20. New opening trade for Amazon, picked up $935. Tesla was down 31. So here I rolled Zillow from 90 to 80, and I picked up 40 cents per contract, or $80 total. So I just provided the spread leg as a courtesy. Okay, I provided my thoughts on Zillow. Provided my thoughts on Tesla. I actually should have sold puts on Tesla, but I mean, whatever. Coulda, woulda, shoulda. You're not going to nail every single trade, and it's impossible to be able to tell the future on every position. So I did what I felt was best at that specific moment. Closing trade for McDonald's. Bought it back for 10 cents, picked up around 60% profit. Closing trade for LMT, very small profit. I want to reduce the number of underlyings. Having a lot of positions on during a sell-off is stressful and hard to manage, so I want to consolidate and close out some winners. Closing trade for Amazon. Sold for 59 cents, bought it back for 18. Rolled it. Picked up an incremental $96 and also reduced the number of contracts from 4 to 2. There are the originals. So for the original, I picked up $280 plus $870. All right. So that's $1,150. 4 contracts total. I just rolled the 4 contracts to 2, reduced the outstanding number of contracts, decreased the strike to $25.60, and picked up an incremental $96. In exchange, I extended the duration by 3 weeks. So I had the original premium at $11.50, plus picked up an incremental $96. That's $12.46. And I reduced the number of contracts from 4 to 2. And I simply increased the duration by 3 weeks. The biggest reason I did this was to reduce the numbers from 4 to 2. Again, my primary objective is to always reduce risk. Closing trade on MasterCard, around a 60% profit. S&P down almost 32. S&P down 11, August 18th. Rolled managed from 3 to 2, picked up $110. So originally I collected around $2,000 of premium by selling those 3 positions. I wanted to reduce the size because I'm concerned that the market might correct in the future, so I rolled the positions forward and reduced the size from 3 contracts to 2. Additionally, I lowered my average strike to 27, and I collected an extra $110 of premium. And in exchange, I extended the duration by 3 weeks. Actually, this would have been a good trade selling the 35 on Uber. But hindsight's always 20/20. The 19th. So here I rolled BABA 4 to 3, extended the duration, and I reduced the strike to 140, rolled 4 contracts to 3, reduced the strike to 140, extended the duration, and picked up an incremental $80. So here are the originals. So I received about $510 in total, plus the 80. So I have almost $600 of premium there that I collected. MasterCard. So calls and Microsoft, B plus grade. Then as a courtesy, I provided my thoughts on the spread leg for Alibaba. Personally, I would probably roll the spread forward and try to sell a call and roll up the long put slightly. Therefore, I'd reduce the width of the spread and then wait for the market to stabilize. Then if I felt that BABA was oversold, I would move up the short puts, be in the money, and participate in the upside. August 20th, partial fill for Goldman. The original is here. Sold for 141. Bought back 1 at 2 for 29 cents. The Microsoft call from yesterday is now an A- trade. MasterCard, new opening trade B+. Sold Robinhood, B+ grade, $25 strike. So this was a challenging week. The VIX from lowest to highest spiked about 60%. Yeah, I remember that. I think the VIX was around 16 and then it spiked up to a maximum of around 2480, or maybe it was 2460. I can't remember exactly. But it had a large swing. August 23rd, closing trade for Goldman, bought back for 29 cents. Closing trade for Fiverr, sold for $1.40, bought back for 70, closed for 50% profit. Closing trade for PayPal, sold for 60, bought back for 24. S&P up 38. August 24th. Yeah, no trades that day. Great day for us. Our portfolio hit a year-to-date high. Closing trade for Fiverr. Sold it for 135, bought back for 55 cents. Closing trade for Goldman. Sold for $1.30, bought back for 35 cents. New opening trade for MasterCard. New opening trade for Amazon. Hit a new year-to-date high. New opening trade for Dollar General. Closing trade for Amazon. Sold for about $3.80. Bought it back for 85 cents. So around a $600 profit. New opening trade for MasterCard, B+ grade. August 27th, closed out DG and Amazon. For Dollar General, we held it for about a day and made about 45% profit. For Amazon, we sold it for $4.85 and bought it back for $75. So that was a huge winner. PayPal closing trade, sold it for 84 cents, bought it back for 18 cents. Microsoft closing trade, sold it for 55, bought it back for 44, closed for a tiny profit. I just didn't feel as comfortable with that position as I usually do, so I wanted to get rid of it. We're at a year-to-date high. Selling puts on AXP American Express is a decent opportunity, strong brand. August 31st. So here I rolled BABA, just one contract. I rolled it from 140 to 135, and I financed it by selling the call and also selling a far out of the money short dated put. Picked up about 13 cents or $13, probably not necessary. Zoom is a decent opportunity, but I have no idea what it's worth. I'm interested in selling the 170 put, but only if I can get around $1.30. But the strike was only paying 40 cents at that price, at that time. As a result, I prefer to have large concentrated positions in Amazon, PayPal, Facebook, etc. New opening trade in Fiverr. New opening position, B plus grade. S&P down $6, volatility mixed. Amazon up almost $50. We made good trades earlier today by opening up Fiverr. And that's it. So if you want to take the trade alerts, there is 7 days available. It's only $19. You can visit beststockstrategy.com/memberships. These have been the options trading live trade alerts that are sent via WhatsApp for August 2021. I will also post this September 2021 around the second week of October so that you can keep track of my options trades. And please leave a comment below if you have any questions.